Hello again, let's do more business. Is the stock market your best short-term investment? When should you invest in a stock, shares or even equities? All these will be broken down by Philip and Odelia following their recent training with Bloomberg.
I'm here to tell you exactly what should happen in these two cases. When the economy is doing well, where you should put your money, and when the economy is not doing well, where you should be putting your money. Well, we're going straight into discussing issues relating to stocks, what they are, and indeed when you should put your money into stocks.
Odelia, so essentially, if I have a stock, it means I have part ownership in the company.
That's right.
It's referred to as either a stock, a share, or an equity. So you have a stake in this company's function. One example will be MTN. Recently, they listed on the Ghana Stock Exchange, and by that, Ghanaians became part and parcel of the shareholders of MTN.
So what Philip is saying essentially is that if you hear somebody say a stock, a share, or an equity, all these three are the same.
Okay, so essentially when I put my money in a company, I expect to make something back in two ways. One, I make it back in terms of dividends.
That's right.
So at the end of a financial year, that's typically 1 year when a company operates and they make some profit, they give me some of it. Two, the other way I'll make money from owning a stock is by trading on what we call the stock exchange. And in Ghana here we have what we call the Ghana Stock Exchange, where we buy and sell shares, stock, or equity. So anytime there's a demand for a certain stock, let me use MTN again, and the share price goes up, then if I'm holding a certain quantity of that MTN stock and that price goes up, then I've made some gains on that stock. So I can sell it off to somebody, and the difference between what the price was before and what the price went to is what we call capital gains or capital appreciation.
Okay.
So that's essentially the two ways in making money from stocks.
So somebody will ask that at what time do we call a stock being floated as an IPO, and at what time will they go onto the secondary market? So if you could also break that down.
Okay, lovely question. So the first time a company goes on the stock exchange, MTN was privately held by a number of shareholders, and decided that, okay, you know what, we want to give Ghanaians some ownership of MTN. So decided to do that through the stock exchange. And the first time a company comes to market is what we call the initial public offering. So that's the IPO. Now, if I decide to buy some shares of MTN, and after a period of time I want to sell it and buy maybe something in EcoBank, then that's where the secondary market comes inside. So the primary market is where for the first time I go and buy MTN shares and MTN lists on the stock market. Secondary comes inside when we buy and sell MTN shares on the same Ghana Stock Exchange. So there's a platform, if I can call it that, where we can trade these shares. Yeah. So if you have MTN shares and you want to sell it off and you want to buy my EcoBank, then we do that transaction on the secondary market.
Somebody will want to find out when they trade off their shares on the secondary market, does the profits they make, part of it go to the company that initially offered the shares, or profits then are shared between whoever is buying or selling on the secondary market? Okay,
so this is where I said capital gains. And the word used here is capital gains. Profit is reserved for after a company runs its operations and you realize that, okay, you know what, I've made this number of revenue and my costs are this. So when I subtract the revenue from the cost or the cost from the revenue, then I have my profit. But when I'm trading on the stock exchange, anything I make in terms of an increase in the share price is a capital gain.
And so definitely that does not go to the company. It goes to
you, the investor,
That's right.
or the shareholder, or the stockholder, or the equity holder. How the company may profit, in the sense, is that if people buy their stock in a very large number, demand and supply comes to play, and it pushes the share price of the company up. And if there are people within the company that are holding some shares, directors, members, whatever, they stand to benefit. Sometimes compensation of key management of some companies is tied to their stock prices. So if your stock price goes up, then you stand to benefit a lot. So how does the stock price go up? It's all based on information. If a company releases some good financials, it does well, it does some good corporate something, then you're going to see a demand for that stock, and it's going to push it up. And in turn, managers of that company will benefit from that appreciation of the stock price. Is that cool?
That's cool. Yeah.
Okay. So that's essentially what the stock market is all about. Buying and selling of shares where we can make more money and where companies initially go to raise money from you and I. And that's essentially what Ghana Stock Exchange seeks to do. There are about 35 to 41 companies. If you check data compiled by Bloomberg, it says 35. If you check data from Ghana Stock Exchange, it says 41. So let's put it within that range. And if you look at other markets, like the US, for example, they have about 7,000 plus companies on the stock exchange. We are nowhere near there. It's going to take some time for companies to come on.
We actually have 30,000 stocks being traded.
Whoa! You see? So you realize that over a period of time, managers of the economy should put in place good measures that will see companies go on the stock exchange, not just because they have to go on the stock exchange, because it's a primary tool for looking for money. But apart from that, stock exchanges are barometers of economic growth.
My name is Odia.
And my name is Philip Danfure. Thank you.
This is Breaking It Down.
Interesting conversation. Now you know what the stock market is all about. Let's move to the commodity news now. And crude oil opened the market at $80 a barrel after going up by 25 cents. Gold recorded a $1.35 increase to sell at $1,227.84 an ounce.